I don't think quick commerce has yet played on price. If you see where quick commerce demand is coming from, it's coming from our urban metros, from people and segments who seek convenience, right? And hence, the entire opportunity around pricing and building value through quick commerce is yet to play out in the market. Having said that, I think we will see some bounce back of physical retail too. We are seeing that in tier 2 cities especially, where physical retail, the large modern format stores, the large format stores are making a comeback, right, in terms of same store sales growth. So in the near term, I think quick commerce will grow, modern trade will grow, and therefore you will see that pricing per se will be less of a challenge, and it will be more around distribution and penetration. But the only difference is there will be a shift from the brands, the large brands, to D2C and private label, right? Because the consumer will seek value, and there's more experiment seeking and experience seeking amongst younger consumers, which will drive D2C and the long tail of private label.
And DTC is proving quite a disruptive force amongst the established FMCG players. And let's talk about foreign competition, multi-brand retailing. And it's very interesting to note that Walmart-owned Flipkart is now returning to India, returning to its roots, if you will. They've got their eye on an IPO too. How do you think that's going to shake up the landscape?
Sure. So specifically, I think the marketplaces were a little late to realize the potential of quick commerce, right? And therefore, you had a lot of smaller players actually open up the segment and build, or at least change behavior in that segment. So you will see the marketplaces over a period of time gain from their traditional strengths and size to deepen presence in the quick commerce space, right? So I think going forward, it is going to be a good category which will see some consolidation, because it's not possible to have so many players in the market, but it'll probably play out regionally and it'll play out differently in different parts of the country, right? But you will see some consolidation which will happen and a shift towards the bigger marketplaces.
And it's interesting that Flipkart are ramping up the hiring and the innovation engines for their quick commerce platform, Flipkart Minutes. Are they going to be successful, and will they emerge as best of breed, or are they a little bit late to the party?
See, the two things which determine success for quick commerce is scale, right? The more number of dark stores you have closer to the consumer, the faster the delivery is, and therefore the faster the growth will be, right? And hence, deep pockets of investment and access to capital will really determine success in the quick commerce space. So having said that, I think we will see the marketplaces do much better than the smaller players.
Commerce Minister Piyush Goyal has been absolutely categorical and has ruled out the entry of multi-brand retailing in India for fear that these huge enterprises can muscle out the mom-and-pop Kirana stores. Is there a policy approach that perhaps combines the two and that can support both?
I think there's benefit in both sides, right? When you have multi-brand retail, you also have technology coming into the entire space. You have access to foreign capital, plus best practices that have worked elsewhere comes into the retail system and therefore builds some efficiency and brings down prices for consumers. But having said that, retail is a very big employer. After agriculture, it's the largest employment generation opportunity in India, and therefore multi-brand retail needs to coexist with the Kirana and mom-and-pop stores. And our own projections say that mom-and-pops will continue to be relevant. Even by 2030, about 2/3 of the market will be the mom-and-pop stores, right? So I think there's space for both modern formats as well as traditional Kirana stores.
Is there a way in which the Kirana stores can survive and maybe even thrive, for example, by partnering with quick commerce as mini warehouses or distributors with local knowledge of smaller rural communities, which is clearly where the growth is, as we discussed, and partner along the supply chain? And I know we're going to have a discussion about the challenges in the cold store part of the supply chain, which is another issue. But do they have a role there in partnerships?
See, I think distribution-led businesses, especially for fast-moving consumer goods, will continue to depend on Kiranas, right? But they have their own challenges when it comes to the second generation wanting to come into the business, right? But having said that, they are also modernizing. There's a lot more of self-service and convenience which is being provided by walk-in mom-and-pop stores. And there's door delivery which is being given. Plus, there's credit, right? In India, especially when it comes to middle-income and low-income households, credit is really important when you buy your food and other staples, right? So that is the niche that Kiranas serve, and hence technology can make a difference, right? If you are able to carry stock which is relevant and turn it more often and build up these linkages on the supply chain. You mentioned cold storage specifically. There is a lot of infrastructure that's being provided by both the beverage players as well as frozen foods and ice creams and all of these different kinds of players, right? And that will help enhance the cold chain delivery at the last mile, right? But there are challenges on the supply chain, but given the agricultural investments that are happening, some of this will get plugged over the next few years.
Quick commerce fundamentally is popular, but it's not profitable yet. Underlying unit economics are not particularly compelling, and it's becoming a crowded space. So how do they make the margin?
So when it comes to quick commerce, what we're seeing is that it's going beyond food and grocery, right? For example, phones are being bought, gifting articles are being bought, consumer electricals and appliances are there, right? So I think category expansion is one important route to profitability. And the second is also to look at organizing unorganized spaces, right? So plastic goods, looking at selling currently unorganized categories, right? Private labeling them and selling it through quick commerce is the other opportunity. And private labels have been the route to profitability for most retailers in India, right? And therefore, quick commerce is not going to be very different. And the last step is obviously bringing in the scale advantages, right? As you expand beyond the metros, can you change behavior in tier 2 cities? Some of the tier 2 cities are looking good for quick commerce, especially they're building on where food service has captured some of those markets, right? And therefore, quick commerce is building on that. Hence, these would be the critical areas of focus from a quick commerce standpoint in terms of path to profitability.
Just how intense is the competition among the top players like Eternals, Blinkit, Zepto, Swiggy's, Instamart, and can they coexist, or ultimately, like Highlander, can there only be one or maybe two major players? What are the prospects for consolidation on the horizon, Anand?
I think consolidation is inevitable. It will happen. But however, what's happening now is there are regional strengths for each of these players that you've mentioned, right? And therefore, given their regional strengths, each one of them will deepen their presence in different parts of the country. And therefore, you will see some consolidation happen in different regions, right? And over a period of time, like retail in a broader sense, you will see consolidation in quick commerce too.